The broadcast is now starting. All attendees are in listen-only mode.
Hey, Dale. You're unmuted. You have to unmute
Hello,
yourself.
everybody. Hello, everybody. Welcome to F.A.C.E. How are you? Give me a Y if you could hear me clearly. Give me a sound check. How you doing? All right, so the name of our community is F.A.C.E, ForexAnalytix Community Experience, so I thought I'd show mine. It's also a very happy face, as you can tell, because this is the most powerful combination of the community. Before I joined Blake and his team, the community was great on its own, but now they have excellent traders to collaborate with and bridle up with. This is going to be even more powerful. So I want to show you the other reasons why I decided to and was grateful and happy to join the ForexAnalytix team. Here they are. I'm sure many of you are already subscribers, but here are the faces that convinced me that this could be the best room on the net going forward. Everyone here knows Blake, missed Blake when he went off the air. Blake's going to be joining us to give a look ahead for the week. I interviewed Blake several times on FX Street and always respected his work, and we had excellent conversations 2 ways. He was very open to what I would see, and we had great discussions about markets. Here's the other face. Next face is Nicola Duke. I interviewed Nicola at least 2 times, maybe 3 times. People would tune in because they love her British accent, and more than that, her great calls. She is specializing in harmonics here at ForexAnalytix. She made a great call last week on the long side of crude and booked it, so you could look for your harmonic work. Yes, everyone loves Nick's accent. And besides having a great accent, she's a great trader. If harmonics is your cup of tea, which they also drink mainly in England and Great Britain, Nick will be covering the analytics. Blake's going to be covering basic technicals along with Stelios. You know him as Steve Volgi, Stelios Vulgaridis. And our macro guy is Stelios Kanto. He's going to be the writer of macro on all the different instruments that we are going to be covering, which are many. And then we have Greg Horvat, who I also interviewed. I did interview Steve Volgi. Greg I interviewed, and you know why I interviewed him? I interviewed him because he was an award winner on FX Street for content. And I asked Blake, how did you come to choose people that were going to be on the team? And he said that he chose the best possible analysts in their own discipline. So one of the major advantages, besides great eyes from the team, is that you have different disciplines and methodologies all on one site. You don't have to subscribe to an Elliott Wave site and then subscribe to a harmonic site and then subscribe to a candlestick site. It's all right here at your fingertips here at ForexAnalytix. And I'm looking forward to this community being as powerful, and even more so now that I'm associated and part of the team. I'm bridled up with the rest of the horses here. Some of the best traders on the globe are at ForexAnalytix, and the community will still be collaborative. I encourage people to share the work. We'll be doing some of that today. You could post a link in the chat box and we'll take a look at what you're seeing. A picture speaks 1,000 words, and then during the day we're going to be receiving content and ideas and potential actionable things to do in the market from the crew. And I want to welcome everybody, and I believe Blake wants to make a few comments before we get started in covering the markets. He wants to share his look ahead for the week. So take it away, Blake.
Hey, Dale, can you hear me?
I can, yes, Blake.
All right. Hey, good morning. And I wanted to, first of all, say welcome to the team. So glad to have you part of the team. I'm not going to be showing my video of my face this morning because I am, you look good at this time in the morning. Me, not so much.
Thank you, buddy.
Well, you know, I want to welcome you to the team. It's really good to have you here, and it's good that we have a webinar series. I felt it was extremely important for this community, and so did the rest of the team members. For those of you that are you know, maybe used to hearing my voice, or you know, maybe it's Dale's, or especially those of you that had been used to hearing my voice daily. Unfortunately, due to what's the word I'm looking for?
Non-compete.
No, not non-compete. You know, we're hosting a currency webinar at a different time than my old employer, so I'm really not worried about that. It was more because of my duties of what I manage throughout the course of the day. I can't be here to host every day, but I can at least be here, you know, at the beginning of the week and kind of talk about what I'm going to look at throughout the course of the week. This webinar that Dale's hosting, you know, with ForexAnalytix, it's more than just you know, analysis from us. It's analysis from the community. You know, traders like yourself, which most of you are familiar with using the Citrix software. You can be on the road. You can communicate with Dale and say, hey, Dale, what do you think about, you know, the euro dollar right now? Those of you that have worked with Dale in the past probably will be posting your charts. Dale will be showing your charts. You guys are going to be sharing ideas. It's all about the community experience, but even more than that is Dale will be putting together interviews of some of the best and most talented minds in the market. So, you know, whether it's you know, hedge fund managers, analysts, trading psychologists, you name it, different traders like yourself, independent traders. He's going to be bringing people in to do interviews, so you get a different perspective and you get a different point of view of the markets. And I think you guys are going to really enjoy the hour to hour and a half that you have every day with Dale. We're just really happy to have you part of the team, Dale. So thanks for joining us.
Thank you, buddy.
Now, what I thought I'd do really quick before Lydia gets here, and you got your first interview today, Dale.
Yes, and she's known as the cable queen, and I thought, God, what a great time to have someone like that after Article 50 to ask her if all of that, the Brexit, is in the market, or the market is possibly discounting too much on cable. So she'll be covering cable and the crosses. Always learn a lot from Lydia. So she'll be here in about 50 minutes.
Yeah, and that's very exciting to have Lydia here. And I'm not gonna steal her thunder by talking about the cable. And I really wanted to talk about a few things that are happening this week. And most of you are familiar with the week ahead video that we produce here at ForexAnalytix, and I hope you guys enjoy that. But you know, this is going to be a very busy week, Dale, and it's going to be a busy week for the cable because you know, we had manufacturing PMIs come out today, but we've got different PMIs coming out throughout the course of the week in the UK. So you know, it's going to be a lot of very data heavy for the pound. So I'm interested to hear what Lydia has to say about that. And this is part of the new ForexAnalytix community experience, better known as F.A.C.E, is that you are getting different perspectives from other traders, not just myself, not just Nicola Duke, not just Greg Horvat or Steve V or Stelios. We're bringing in outside folks, different traders, different management styles, different everything. So you're going to get different points of view, and that's why it will behoove you to be on this webinar every day because you don't know who Dale's going to bring on. And so we're excited, and you don't even know if Dale's going to sing or not, which is even more exciting. Now as far as our week ahead video, I do produce it, or actually Steve produces it. I put it together, and Steve produces the whole thing and makes it look pretty. But there are a few things that I wanted to cover this week, and in particular, it's a really interesting. I look at the euro dollar. We're sitting here at the 618, but more importantly, the euro dollar is nearing some trend line and what I figure is very important support right here at the 618, and the trend line support that comes down to 106. My 2 cents is, as long as the euro is trading above 106, you've got to be on the lookout of a possible bounce at this level. The ECB took the wind out of the euro dollar last week, with some of their comments, and that's what really drove the euro dollar much lower. But we're approaching support, and traders have a really bad case of ADD anyway. So they look at this move now, and most traders have forgotten that the ECB even said anything about monetary policy last week, and they're just looking at it as probably coming in as some support. So the euro dollar is probably going to find some support around here. As a matter of fact, if you look at the dollar index, more importantly, I think the dollar index is just approaching some pretty key resistance. We're closing in on the 101 level, and I think we could make it up to 101.50. But the dollar itself is a little heavy, and if you look at also like the Swedish krona, let me get up to the Swedish krona really quick, which, just FYI, I took a short in the US dollar Swedish krona as we rejected the 618 this morning. So I'm looking at the US dollar Swedish krona, like bigger picture view. We still have a bear flag pattern that's in play. It's taking a little bit of time to work out here. But overall, the false breakout in the Swedish krona and the possible bear flag, I'm playing into that. And so I don't mind that the 618 was hit, because it was hit and rejected. I'm already trading it to the short side. So I think the dollar, we might get like a turnaround Tuesday type of event in the dollar, where the dollar is bid today, and then probably starts to lose some of its luster as we go into midweek. So I'm looking that, obviously, I'm already starting to scale in to some dollar shorts, and I'm going the route via the US dollar Swedish krona at this point. But I think that there are opportunities to be a seller of dollars. Now, one of the things that I also wanted to point out, Dale, is I've been an ardent dollar bull for years, and I really turned bearish in the dollar with the new administration.
Okay.
Yeah, and this is not political. I'm not making a political comment here, but I'm making a more of a broad-based statement. Is that I don't. If you think about like Donald Trump and his administration, this is as he got inaugurated, I had been skeptical that they would be able to push, despite having both the House and Senate control with the Republicans. I doubted, because of lack of his political experience, that he was going to be able to push forth as many agendas as the market was expecting. And as you can see with the healthcare bill, that is, the proof is in the pudding that this administration is having its challenges trying to push their efforts, and I think that's going to weigh heavily on the dollar. That was my view 3 months ago. My view has just been more solidified. So I'm playing on the short side of the dollar for that particular reason. And if you look at the dollar index, like I said, for the last, and let's go over to the dollar index and go to the daily chart. This is in my opinion, it's been a false breakout. And if you go even out to the weekly chart here, when we cracked the 618 on the week right here, that ended up being a false break. There's a lot of people that got extremely bullish the dollar following Donald Trump being elected, it going into November, December. Everybody piled in long. The dollar the dollar positioning is extremely long dollars right now, and you can see it in the CFTC data. And so I feel that a lot of these dollar longs are going to get unwound in the coming months. So,
Blake,
yes.
Can I also add
Yeah.
that a lot of people, because of what the Fed was doing, was expecting the dollar to accelerate based on interest rate differentials.
Yes.
But isn't it true that higher interest rates could eventually weaken the economy, therefore weakening the currency rather than strengthening it?
You know, there's a couple thoughts about that, and yes, I could agree with you on that particular subject. But what's probably more pertinent to today is aside from higher rates will probably weaken the economy a little bit. Inflation has been stoked globally, and so you're gonna see, to a certain extent anyway, you're gonna see other central banks become a little bit more hawkish and probably want to play catch up with the Federal Reserve. And that's why, you know, you get this comment and get these comments that, hey, you know, if the dollar, if the Fed is raising rates, you know, you hear some analysts will say that the dollar will actually weaken. Well, usually it's because it depends what cycle the different central banks are in. But if the Fed is in tightening mode and the other central banks have been more neutral to dovish, and they turn more hawkish, that means it's going to play catch up. So you'll see other majors play catch up to the dollar, which in turn you'll see the dollar weaken, and it'll then, you know, signal, oh, the dollar is now weakening with the Fed raising rates. But it's really, you know, some of the other central banks playing catch up. So I think there's a few aspects that are playing into the current dollar weakness. So, you know, I think there are a few things that are just weighing on the dollar, and that's why I predominantly want to play on the short side at this point in time, Dale. Now, okay. one of the other things, you know, talking about this week is we do have jobs report right. on Friday. We also have Canadian jobs report on Friday. We have the FOMC minutes this week. So it's going to be a huge week for the dollar. And I think by the end of the week, we're going to have a pretty clear idea of where the dollar is going for the next couple of weeks. That's the good news. This week's going to be a little challenging, though, with, you know, when you have all the ISM, the ADP data, you have the FOMC meeting minutes, then you have the jobs report on Friday. I think after Friday, we'll have a very good idea that, hey, the dollar is indeed, you know, starting on this path of weakening, or, you know, maybe the dollar is going to be in this you know, challenging range that we've seen for the last few weeks. Maybe we continue in that. I'm hopeful that the dollar is going to start breaking down by Friday or after Friday, but that doesn't necessarily mean it's going to happen. It's just that's my plan for.
Well,
right
how about
now.
Nicola Pinkert that the dollar rallies into looking for a strong jobs report and gets it and fails from there, or doesn't get as much of a strong jobs report as it's looking for? A lot of inflection points on the NFP.
You know, it's possible, and I don't think that's out of the cards either, and that's why I don't want to. That's why, you know, I've only got $1 position on right now from today versus having you know, multiple dollar positions and getting aggressive right now. So yeah, I know for myself, I've got to trade carefully around these prices too. One last thing I want to bring up, and then what I'm going to do, Dale, is I'm going to pass it over to you so you can take it from here. If I want to know that the dollar is going to weaken this week, okay, the cue I'm looking at is really in gold and silver. Okay, the precious metals is what I'm watching very carefully, or in other words, I'm looking for confirmation. If you notice that the dollar, or excuse me, this is gold here. We've got gold knocking up against resistance, the 200-day moving average. We hit resistance again at the 200-day moving average. But notice how resilient it is. You know, even with the dollar, and if you just match up the dollar here, all you have to do is click compare and put in the dollar index. And what you'll notice is, even with the dollar's rally, significant rally that we've seen over the course of the last week, the gold pullback has been very minor, okay? So gold, if we start breaking above 1260, 1261, that's going to be extremely bearish the dollar, okay, because they tend to have inverse relationships. And if you look at silver, silver has broken a massive downtrend line that's been in existence for a year. You see the peak here back last summer, and here's the trend line, right? It drops in, and we're trading above the 200-day moving average. Now, we've been consolidating here for like a week almost, but we're above the trend line, we're above the 200-day moving average. If silver starts to break higher and gold starts to break higher, that really is the cue that I'm looking for, that I need to be short dollars, or maybe aggressively shorting dollars. But that's really what I'm looking for this week. I wanted to make sure that everybody knew that it's going to be a challenging week because there's so much data coming out. It's not going to be cut and dry. It's not. I think by the end of the week we'll have a very good picture of what we should be doing with the dollar or precious metals. But I think it's going to be very choppy this week as traders are trying to establish their positions and figure out what the right move is. And frankly, at this point, I don't know what the right move is either. And so that's why I'm going to be nimble, and I'm going to start paying really close attention to these precious metals. There's a lot of people that are bearish gold and bearish silver. They think they've had a nice rally from their lows over the course of the last couple of weeks. I just read a piece this morning that silver is one of the best best performing assets since the beginning of the year. I mean, if you look at the beginning of the year here in silver, we've gone from $16, a little less than 16, to 18. That's a huge move. What's that, 14-15% this year thus far?
A lot of people playing the gold-silver ratio to come in and narrow.
Yeah, and if it does come in, that means silver's outpacing gold. That's right. Typically very bullish for precious metals. Whenever silver outpaces gold to the upside, that tends to be a bullish sign for precious metals, and that's kind of what we're seeing right now. So again, these are the things that I'm looking at. And before I let you take over, Dale, and I'm going to pass it back over to you, I want to say once again, welcome to the ForexAnalytix team. We're so happy to have you. We're really happy to have the F.A.C.E webinars, the ForexAnalytix community experience. And we're really happy to have all of our listeners listening in, and I hope you guys get a lot of not only great ideas of things to trade from the community, because you guys and gals will be sharing charts with each other, but you get great knowledge from the experts that Dale has been hand selecting and will continue to hand select moving forward. And I know, how many interviews do you have set up this week? And you don't have to tell me who they are, but how many do you have, not including our team?
Three.
Okay, so you've already got 3 in the lineup, not including people from our team, which, right. Nick and Grega and Steve and Stelios will be joining in from time to time. We all want to make an appearance at least once a week, and myself, I'm going to join on Mondays with you guys, most Mondays, and I'm going to try to join in maybe even 1 or 2 more times throughout the course of the week. So with that being said, thank you all for being here, and Dale, we're super excited to have you as part of this. I'm going to pass it over to you, so here it goes. You should have the controls, sir, and I'm going to mute myself. You guys have a great webinar, and thank you, Dale. Thanks everybody for listening in. Glad to have you all here.
Thank you so much, Blake. See, someone said, I was hoping Blake would be the host, but I said, I know it's big shoes to fill. Blake's shoes are big to fill, but I don't have to, because we're a trading family, and ForexAnalytix is at the head of the table of our family, and I think it's time for us. I'd like to see some links from, if any of the former or community members that have been with me for 3 or 4 years, if you want to show any of your work. Someone said they're having a hard time finding the chat box. Maybe someone in the community can direct them. There's Alexandros. How are you? If you can just go to the chat box to share your looks. This is going to be collaborative. I don't have a lot of rules. Okay, guys? I have a couple, though. We're all captains of our own ship. meaning we're all responsible for what we do in clicking our mouse. Give me a Y if you agree with me. Give me a Y if you agree with me. We're all captains of our own ship. All right? The other rule is no one in here takes any pleasure or roots for anyone to take losses so that they can rationalize their own inadequacy in the market. We're all pulling for each other. We're all hoping. Tell them to click the arrow at the top right and they'll get the chat box. Go to your control panel, Khalid, and click that box and it'll break it out. Thank you, Hasselhoff. All right, you like this rule? Okay, there, Nicola just gave us a Y. So we don't allow that. I'll ban you from the room, maybe warn you once if you do it. I'm 6'2", I could be a bouncer. I know I'm a little older than Blake, but we're not going to tolerate that in here. It's got to be a place where people feel comfortable to share their work, where there's no blame, and it's a team effort, definitely, Dan. Dan has seen me at work before. I'm sure many of you have, Ziggy, and the decorum of the community is very important. So if anyone wants to get the ball rolling, in the meantime, I could share a couple looks that really kind of line up with what Blake said. You know, Blake talked about that big dollar rally that we had last week, and gold didn't give up much ground. This wasn't really much of a big rally in the end. The way the dollar rallied wasn't even, I believe, 38% back. So one of my favorite risk-on, risk-off currencies is Aussie yen. Learned this from Chris Laurie, that this is his barometer for risk-on, risk-off. And we had this rising wedge, and Friday I put out a sell in Aussie yen here. Wedges, what's the rule for wedges? How much of a retrace can you expect from a rising wedge? Anyone know? Is it 38? Is it 50? Is it 61.8? Okay, Hakan says up to 61.8. How about 100%? Jess Q has it 100%. 100% is a rule from the Classical Technical Analysis book by Edwards and McGree. Jess, how are you? Nice to see you in here. So eventually what I'm looking for are these lows to be taken out in Aussie yen. So perhaps the yen gets, we get a little bit of a pop in the yen into the NFP or on some strong numbers. I'd be looking to sell some retraces. Here's something else that I teach. It's a 3-drive formation. Here's 1, here's 2, here's 3. And we did diverge pretty well. This was a major reason. So every once in a while you have to break out the telescope. But I feel this is a very significant pair. So this was really the line in the sand. Right here. Right around 85.80. See that? It's been a big pivot. Held it, rallied, held it, rallied, broke down the week before last, rallied back to it last week, starting to come off. I think that an 82 handle is possible in the coming days and weeks. Give me a Y if you understand the analysis. You don't have to agree with the call. Just said you understand the analysis. AJ going up is risk on. Okay, Luca coattailed me Friday. So I think there's more to go here, and I'd be looking for sometime this week, some type of fib or trace of the recent down leg that we had out of this rising wedge. Maybe back towards 85.40, maybe a 50-60 pip rally, looking for it to be a failing rally. Maybe it's going to be the Aussie if Blake is right about the dollar peaking. Maybe it's going to be the yen that drags it up, but I like this. Last week I also talked about Aussie Kiwi. putting in a failing rally. That too is underway. So just have a little patience with me. Guys that have been with me know I'm using new charts. I'm in a new room. So some technical things. So to me, here's another 3 drive, pretty classic. This is something I teach. 3 drives to a top, 3 drives to a bottom. Rename the RSI from relative strength index to real simple implicator. This is pretty classic. Look at this divergence here. And then we'll get into some screen shares. So here you go. Drive 1 was a confirmed high. Look at the RSI underneath it. Drive 2 began to diverge. And then we had drive 3, a little bit of a throwover, but glaring divergence under 70. So my ideal setups for reversals on highs are under 70. On the second divergence. So there you go. Take a picture for a 3rd drive. The bigger picture here. And I'm bullish long term this pair. But here's your daily. So what I was thinking was last week that this was A, and I'm not an Elliotician. Greg and many others could probably refute it. But anyway, I was thinking A, B, C, maybe back to the breakout towards 107. That's an area I'll be very interested in beginning to accumulate. Yeah. So those are a couple of things that I'm looking at. I know that there are some veterans that have been hanging out with me for a while. Alexandros, do you see the chat box? Khalid, do you see the chat box? Jess? Why don't we show some of the community how we collaborate in here? What I like about a community is each of us only has 2 eyes. But within a community, there are many other eyes. There are many other eyes out there that may draw your attention to something that you had not even considered. And another thing I really enjoy is when people that use different methods come to the same conclusion. You could do it in the chat box. Yeah, that link's not going to work in the question box. You have to do it in the chat box. Hardianto. Hi, Baki. So that happens a lot in the community. Someone might use a completely different methodology and then it points towards the same outcome. Gives me even greater conviction in the trade. So still waiting for someone to post in the chat. Here's here, I'll type something in the chat. I understand it's a new room for many of you too. Let's see your work. Can everyone see this? Let's see your work. Okay. So Leo sees where the chat box is. Okay, Jess, you're putting it in. You're still putting it in the question box, not the chat box. Links will not work there. That is not the chat box. That's the question box. Sure. Okay. You guys have a control panel like this. I don't know if you guys could see it. Here's my control panel. Can you see the control panel? Okay. So members are having trouble finding the chat box. There's a separate chat box. Separate chat box. Maybe I could get some help from the staff to help people find the chat box. Mobile only. Oh, mobile only has question box. You should be able to post something in the chat box. All right, let's see if this works.
Hey Dale.
Yes.
Hey everybody, this is Steve from ForexAnalytix as well, Steve Bulgaridis. Dale, the chat box is on the right hand side, but they cannot see your panel because, you know, it's invisible
Right.
by default.
Right.
I unfortunately don't have an attendee, but I can log in as an attendee and have a look. But there should be, on the right hand side, there should be, they should have various areas they can expand. One of them should be the chat.
Yeah, you could see posts in the chat box, but you can't post anything. No, not there. Do I have to make them a presenter for them to post in the chat box?
Not sure about that. I'll check it out.
Okay, well, that's something that we're going to have to find out.
Yes, they can definitely post something in the question though.
They can't post links.
They should be able to post things in the questions, yes.
Links. The links do not come out as links in the question box.
Okay.
They've already tried it.
Okay, we'll check it out then.
Okay, Rob Lowe, to me private.
Okay.
Test. Okay. Bob Lowe found the chat box.
Hey, Dale.
Yes.
Dale, if they give you a link and it's not clickable, you just have to just copy the whole address and then put it in a browser.
Okay.
So I'll do it. I'll do it myself. So let me see. This one comes from Jerry. So you just you can grab the whole thing.
All right, I just got one from Alex, so that's what I'll do. I'll just copy and post it. This is Alexandro's look at the crude oil.
Perfect, you got it.
Okay, can everyone see my screen? Alex likes to use Ichimoku clouds. I tell people, hey, stay off of my cloud, Alex's cloud, and he's showing that we're still holding the uptrend from last week. And to me, having seen Alex's charts before, looks to me like he's looking for this trend to give way and for correction, maybe back towards this 49 level. So very nice look from Alex. Thank you, Alex. I want to thank Alex for that. And then here's the link for you guys to see it if you didn't see it here. Thank you, Alex.
Hey Dale, are you there? Can you hear me?
Yes, I hear you.
Okay, good. Maybe I can share some charts. I'm just here at the screens and I can share some charts of Elliott wave charts. If you have time, what, 10 minutes, 15 minutes till you arrive? Your guest?
Okay, sure. This is Grega.
Yes, they know me. They know
okay,
my
Greg. Okay, Grega. Thanks for dropping by.
Sure, why not? I just think that we have some interesting price action on dollar index, so it would be great to compare some of my analysis with Blake's in the chart earlier. So
go ahead, take it over.
Okay, so firstly, just I just think that you need to make me presenter, right?
I did. Oh. There you go.
Okay.
Hey, Gregor, good morning. Good to hear from you.
Hey, it's good afternoon here.
Good afternoon. That's right.
So do you see my chart?
Mm-hmm.
Okay, so you see what? Dollar index?
Yes.
Okay.
Two charts are up there, the daily and the 1 hour.
Okay. So Blake earlier mentioned that he sees some important trend line on euro dollar. So actually for the short term, I agree with him because as we know, dollar moved quite nicely to the upside last week, and normally such sharp price actions will not continue forever. So definitely there will be a pullbacks, and he said that these are important levels, if I remember correctly, around to 106. Is that correct, Blake? Can you hear me? Are you still there?
I can. I just had it on mute. Yes. Yeah, 106. That's the price I was looking at.
Yeah. So actually,
yeah.
Yes. What is really interesting is that if we go to lower time frames here on the right, you can actually see that clearly we have 5 waves down. Okay. So which means that there can be a temporary bounce coming in the next few sessions. Actually, I'm waiting for this bounce since start of last week, and I just had a discussion with Nick also. I said that those such sharp and unexpected reversals can actually be very extended, which means it will be very, very hard to get in. So I'm very desperately waiting on this pullback to unfold, and as we can see, we had all just very small minor corrections. So from a trading perspective, it was actually very hard to get in and look for potential trade setup with normal risk reward setups. So I'm still waiting on that bounce. We have 5 waves down here, and looks like that we are now slightly can be turning to the upside, since we are testing this upper resistance line, and ideally we'll see a 3-wave recovery. But those who are familiar with an Elliott wave technique, you know that 3-wave recovery will take us back to the area of a former wave 4. Now, former wave 4 of 1 lesser degree is at 107. So actually this could be a first resistance. But normally I would expect that bounces against 5-wave structures will unfold at least, or will retrace at least for 38.2%. Okay. So that would be my minimum requirement to see this bounce before I'm going to look for short. So actually, I would not be surprised if we'll see a reversal back to wave 4 of 2 lesser degrees. Okay, so that's something for Blake to learn Elliott waves. So Blake, listen carefully.
So about 7.5, Gregor?
Yes.
Okay.
1.0760 would be my ideal zone. So actually, for the near term, yes, I have quite similar outlook with Blake. We could see a bounce, definitely. As I said, we will not go straight to the downside. Watch for 3-wave rally. At least I'm waiting on it. And then if we will get a 3-wave rally, and not just bounce, if we'll get a sharp bounce in just 1 leg, that's a different story. Okay, because corrections are always made by minimum 3 waves. So what I want to see here is wave A to the upside, then you have wave A, B, and then you have wave C. So only if I see 3-wave bounce, only then I will consider short ideas. Okay, until then I'm just watching and waiting on this pullback to unfold. If we'll see go straight move to the downside and break this trend line, then definitely maybe there could be some aggressive shorts coming with tighter stops, because then a free fall could be coming towards the lows. So, so for the near term, as I said, watch out for a bounce, as Blake said as well, while we are above this trend line. And ideally, this will unfold as a wave 2 that has a resistance at 107.50 to 107.60. Okay?
Then the big money wave to the downside, right, Greg? Like a fib extension of the first wave down?
Yes, normal, yes. But as always, we need to focus on minimum expectations. So it's maybe we will not see wave 3 to the downside. Maybe you will see just a wave C to the downside. So if I relabel the wave count here on the left, Okay, maybe this is wave, just a second. Okay, just give me a second here. So maybe is this wave A, wave B, and we will see another wave C down, not the wave 3 to the downside. So as it comes to trading, at least with my technique, I always focus on minimum expectations, not what analysis said. Okay, the analysis to me, write this on the left, it says that we could fall back to new lows. Okay, but as a trader, if you want to make money and make a good risk-reward trade, you need to focus on your minimum expectations. And in such case, I would look for maybe for opportunities with limited downside in wave C, but still enough movement to the downside that can make you money. Okay, so that's what really matters. Don't look too far into the future. Just try to focus on a one wave at a time. That's probably the most important advice that I can give you.
Okay, before you go, Grega, there's one question from the community from Alexandros. Grega, isn't it a problem that your shorter term wave 5 consists of 3 waves? Doesn't this affect your larger wave count from the highs?
I suspect that he means this decline, right?
Yeah. Is that correct, Alex?
Yes.
Yeah.
Okay. I think that this structure, okay, even if he sees 3 waves decline, does not have an impact on an overall outlook, which is still clearly bearish. Okay, so even I can adjust the wave count, I can move wave 5 here, wave 3 here, and now we have here 5 subwaves. So I would not get confused by subwaves, especially not on an intraday basis, because they will tend to make you crazy labeling the substructures. Okay, because
I think he's saying the last part, Grega. He just put up the last part of the wave. So, you know, I'm not sure exactly what he's pointing to.
Maybe he means this blue wave 5. Yes.
Fifth of the largest degree, yes, Grega.
Yes, okay. You can. I'm not saying that the low of this 5th wave is already in. We can still see another push down and then turn to the upside. But the key is here that we are in a 5th wave, probably in late stages. I'm sure that if I add RSI to this chart, that we will also have a divergence. So the point is that we can expect a bounce, not that bottom has been placed at this tick. Okay, so you need to look more from a larger perspective, make a step back when labeling the wave count, not trying to label the wave count and be right on every tick, on every high, on every low, because this will not, this will just confuse you. Okay, so
Dale, if I may throw in a question for Greg as well, I mean, in case some people want to have a longer term view of his outlook. From what I understand, Greg, since your main scenario is that this move lower is most probably a wave 1, obviously a wave 5, and we're expecting a wave 2 to resume to wave 3. Obviously, your main case scenario here is for a new low in Euro USD. But for your alternative scenario, which calls obviously for a 3-wave, an ABC, and as you very well said, Elliott waves are lovely because when you find the confluence of the views, it doesn't matter if what will begin after a rebound is wave C or wave 3, because you will be able to tell that while you see it unfold, you can still make money being on the right side of the move, and then decide while it's ongoing if it has more or if that's it. But what would it mean actually for the general, for the bigger structure, if we also see a move lower in 3 waves? Will we be in a triangle? What is the formation you will be looking then in the long-term chart?
Actually, the question is where this 3rd wave would bottom. If this 3rd wave would bottom below 104.95, okay, then obviously this decline would then be part of something bigger, more complex correction. As you said, it can be of a triangle. If market would bottom with this subwave C above black wave B, okay, then we could assume that this is wave 1, 2, and another 1, 2 as part of a new bullish cycle. So in that case, actually you're lucky because I have prepared this wave count last week. In that case, I could be looking even for this type of a structure on a higher time frame chart on a weekly, which suggests that we could be headed to the upside for wave C. So, but I assume, because I think it's better and easier to predict the markets if you stay with the longer time frame, direction. I think that for now, this wave 4 is has been already completed. I think last year. Here as a triangle. Okay, so actually I think that I can also show you this wave count.
So a simple ABC triangle.
Here you have on monthly level as a triangle, and we are headed south for a deeper wave 5. So the key here is that no matter which count are you tracking, okay, this as a flat for wave 4 or this wave 4 already finished, on the short-term basis, it's the same, okay? Because this was an impulsive reversal to the downside, so it must be part of a three-wave drop. So as I said earlier, don't look too far into the future. Focus on one wave at a time. And when this third wave drop will be unfolding, then it will be time to decide, is this wave 3, is this wave C? And this will actually help if we will focus on personality of a movement. Wave C will typically be slow, while wave 3 will be very strong and extended.
Impulsive. That's why we call them impulsive waves.
Yes.
Thank you so much, Grega.
Welcome.
Thank you for dropping in. Appreciate it.
Good luck with the webinar with the guest.
Hey Dale, do you mind if I mention something really quick?
Go.
Yeah, so I know you're bringing Lydia on here in a moment, but it's great conversation. And Grega, thanks for jumping in. Grega, obviously is part of the ForexAnalytix team. He also owns Elliott Wave Forecast. So make sure you follow Grega on Twitter. He's a wealth of information. So thank you very much, everybody. And Dale, have a great interview with Lydia. I'm excited to hear her.
Thank you very much, Blake. Lydia, are you in the house? Looking for Lydia. Not sure what you...
Dale, I will just stop screen sharing now so that you know
okay.
Okay?
All right, thank you.
Sure, no problem, bye.
All right, thank you, Grega. Lydia is in the house, okay. Hi, Lydia. Before we get started, Lydia, I'm going to make you the presenter, but I'm going to take a quick break here, and maybe you could figure out how to turn on your mic and screen share. And in the meantime, Steve, can you show the video on the phone app or the video tutorial while I address my FX kidneys, and I'll be back in a couple minutes. I'm looking for the audio.
Let's do that, you need to make me presenter, actually, Dale.
Okay, I'm looking at audio. I forgot where it is.
Actually, we can already see Lydia, yes. Hello, Lydia, welcome.
Okay, thank you.
Thank you. Hi, Dale.
Okay, hi, Lydia. So great to hear your voice again. It's been such a long time. I'm just going to take a quick break, and I'm going to make Steve a presenter too, so he could show a little bit about the website. We also have a phone app, so I know Blake trades from the grocery store, so you may want to have the phone app if you're already a subscriber. So when Blake is grocery shopping and he sees something in cable, he pushes out the alert to you. So Steve, can you show that video, and I'll be back in 5 to work with Lydia?
Sure, let's, as you're on a break, let's have a 3-minute recess to show the platform presentation video, so the other one afterwards.
Okay, Lydia, here we go.
Okay.
Great to see your charts again, Lydia Finkley.
Hey, Dale.
How long?
Welcome back to the airwaves.
Yeah, how long has it been? A year?
Maybe so, yeah.
Well, like a year. Well, you know, how timely it is to have you after Article 50 finally came down and was initiated, and I'm curious on your look on cable and the crosses And the question that comes to my mind that I posed to you, Lydia, is, you know, it seemed like most of it was already in the market. We've had a little pullback in the pound after Article 50, nothing huge. Do you think that the market might be a little bit too sanguine about what the longer term effects of Brexit are going to be once the realities of Article 50 begin to manifest on the economy?
You know, actually, I don't think so. And I think I think that actually remains to be seen or remains to be answered, right? Because when we first got the Brexit, we had, I mean, since June, we've had decent to strong economic news out of the UK. And what's not really surprising, because the pound has fallen so much, is that we're getting this inflation. And inflation has always been very ugly in the UK. Before any of this, inflation has always been something that the Bank of England has always had to keep an eye on. And since, I think, post-2008, it's been probably more surprising to central bankers, the BOE central bankers, that there hasn't been so much inflation, and it's taken a long time for it to kind of flare up again. And what has been quietly happening has been wages, right, over the past couple of years, and now we're starting to see consumer price index kind of tick up. So, but we haven't seen any strong economic downturning either out of Great Britain. So I just think it remains to be seen, and I think what we're seeing is a market that's saying, okay, after the referendum vote, which shocked everybody, you know, there was uncertainty, and so we sold off. And then we got a new prime minister, and there was uncertainty, and then we sold off. But what she did was just, she telegraphed, right? She told all of us since, September, that she was going to pull this trigger in March 2017, and it's done. So that's what I think what we're seeing is not so much as a complacency, but more of like, okay, there's some certainty here. You know, this new person said she was going to do it, she did it. Okay, great. And the economic data hasn't shown us anything horrible, so great. And so I think what we're seeing is a pound reaction to all of that.
Okay, and I see that you have EG up here, and since 92, I believe, was the high that we had several months ago. It's pretty much been sideways to lower. And is it possible that the Brexit may have more deleterious effects on the euro than it will on the pound? And
that's what people have been missing, right? People haven't really paid attention to the euro side of a Brexit. So there is a EU side to this whole thing that we haven't paid attention to at all. Everyone's, you know, taking their eyes on the pound and expecting it to drop lower. So, I mean, I called out in January, February on Futures Radio that I was, you know, I believe that the pound is going to bottom. And particularly after Q1. And that was because of Article 50 trigger and all of that. And I think that's what could be playing out here. So in particular to the euro pound, what we see, and I've just flagged them, are these continually lower highs. And so what turned out to be, you know, we have these nice rallies. Back when you and I were talking frequently, like we had this tremendous rally to this 92.70. This is when
we were on together near the bottom last year.
Right, exactly, 0.7, and then we were talking about 0.75, and then 0.8. So we've been talking through this whole rally, and this high is right when May came in and said that she was pulling the trigger on Brexit in March, and so we got this complete sell-off in the pound. And then we got this move lower, this correction really at the end of the year, into the end of the year, 2016. It was a perfect fib play. It came into the 50% fib. It came right to support at 83.50, which we've seen time and again, about 4 different times we've seen the support level hold, and we started to move higher. It's a perfect fib play. I mean, it was perfect on the long-term chart. I thought in particular we were going to go back at least to 90. And what happened was at 88.10, we got failed high. And we've seen 88.10 before. If I just take you out, a little bit higher, out more to the monthly chart. This is 88.10. These little highs above this, I think this is 86. We've seen 88.10 before. So we got this failure. We came in back down to, 84. We came up higher above 87.50, which always seems like we're going to move higher when we can get that high. And we've been failing subsequently with lower lows and lower momentum. So I think what I believe, that's what I believed all quarter, is just taking some time to develop as we, rally, that we're going to see at least a testing of 83.50, and I think we're going to see pound continue to rally. That's what I think. I think.
Okay, so 83.50 would kind of be the bull's line in the sand. Under 83.50 could look like a descending triangle that measures about 800 pips, could take it all the way back down to where we were in April.
Right, yeah. I mean, so people really want to pay attention to 83.50, and then 83 is that low is that 83 level. And yeah, we get a close below 83 on the weekly chart. I think we're going to see some unraveling of this bull trend.
How you scoping out the guppy with what's been going on? It's been so sideways, range bound for such a long time. Huh?
It's been range bound. So if you looking for, I mean, it's just so ugly on the daily chart. So
it looks like an EKG of someone in a coma.
Right. It's completely flatlining. And I think it's very interesting what we're seeing with the yen. And I think that, we're getting a bit of, I don't know, we're going back and forth between the risk on and the risk off. I think that's what we're seeing in the yen. And we're kind of still getting this dynamic. And because I'm bullish on the pound in general, I really expected us to get above 140. And it's really, we've just been between 140 and really 138, 137.50 at the extremes. But we're just range bound here. And I think the dollar yen might play a bigger role in how this pound yen plays, just because I think we're seeing the yen having more of an effect than the pound in this pair. So I mean, I think this one you play the range until till it breaks. And I don't know what the catalyst would be for a break, because I thought when we got to 140 last week on the bullish pound that this would follow the rest of the pound pairs higher, and it hasn't. Found resistance again, and it's turned lower, and quite frankly, I think this will go to the bottom of the range at 138, and then, we'll see if we continue lower on this yen strength or we stay in the range. But this one is just, this one is a range play, so take care.
Yeah, it's a do nothing until we close over 140.
140.50 or 137.50, right, close below that. Either way,
Okay.
yeah. Until then, I'm watching this one too.
There's been much more volatility in the pound commodity crosses.
Oh man, yeah. So
I figured that you'd have some things to say about these.
I've been tweeting about the Australian dollar for several weeks now. People are probably tired of my lane, but I've been scoping this one out since we failed to close below at 160. Let's see if the daily chart. Yeah. So again, we've been in this downtrend with the pound falling all over the place, and the Australian dollar, quite frankly, has just remained strong. So, I mean, that's been a great move for bears. But since we kind of bottomed out at this 160 level, and it's been a strong support, we've gotten some breaks lower, but we've never gotten a confirmation of that break. So I'm just talking about, we get this closes below 160, and then the subsequent candle takes us right back up. And so we've never really had a real sustained move below 160, even back here in October where we were jostling below that level. Never really got two bearish candles lower, right? So when we did that again in March, I wasn't trading this pair at the beginning of the year until we started getting this price action around 162. And 162 is a nice support level as well. You got all these former highs when it looked like we would, finally break below 160. And then the RBA came out less than hawkish. And then they came out with the market is just considering quite dovish now. Now they're not completely pulling the trigger on a rate cut, but they're certainly not looking to raise rates right now either. And so we went from less than hawkish now to just kind of dovish, maybe slightly dovish. And this has been really unwinding the longs in the Australian dollar. I think right now we're in a nice fib move, but we have a failed low here at the 162 support level. And what I believe that we'll see is if we're above 164, and I think you see that resistance. This is minor resistance, but you see it better on the 4-hour chart. We played around here several weeks ago. Above 164, I think our ultimate target is 167. And that 167 level is this 68.1 fib. So how I feel about the fibs. We cross over and it's former highs. So this is truly this is the resistance level that I've been looking at for the month of March. I still believe that we're going to get to these levels, and then we'll see if this downtrend is, is truly bottom. And like I said, I'm fairly bullish on the pound, and it's a tentative bullish. I was just talking to a trader last night that we want to take it still resistance to resistance or support to support, whichever pair you're trading. But ultimately here I'm looking at 167, but it's no surprise that we saw a pullback off 165 this morning. So 165 is a resistance level, nice whole number. But I still think that if we have more bullishness in the pound and we actually have follow through in the breakouts we saw last week, 167 here is as a target, especially if we see, maybe on this one, oil start to decline a little bit more. I think that we can start to see, a lot of these calm dolls start to move higher as well. If I jump to the pound cat, I thought it was interesting that we got a strong number on Friday, and so we got this action. After a bullish pound all week, we got this action, and we immediately found bids higher. And so it's this. I think with all the calm dolls, New Zealand dollar is doing the same thing. We're catching bids at the dips, particularly looking at the New Zealand dollar, this 170 level, this was all-time lows. And we had been staying below this all-time low level. You can see this is way back in 2013. That's that 170 level way back here. So this is a big support level. And for us to trade above it and seemingly staying above it to challenge 180, which is also some former highs, which failed and went back below that support level. And so that's, that is a huge level. And for me, it's really 179. These past few highs have been 179. So, pound Kiwi can move. So you can get to 180, break above 179, get to 180 and fail. We've seen it before back in December. So again, I'm bullish the pound, but I'm still very aware of these resistance level and that the fact that we're still in a downtrend. We're still in a downtrend. This is still a fib move, until we get above this 168 level. I mean the 61.8 level at 181.53. So
yeah. So the lesson there is we could probe it with a candle above it, but you don't know what kind of candle you have till it closes.
Exactly. Exactly. So there's no we're not anticipating bullishness per se, or maybe just a full-on breakout. We're really just expecting this bullish momentum to continue into support, into resistance levels. And like this morning, we saw a lot of that. This pullback this morning to me is not a bearish indication. It's a correction. And pound we're now back above 178 in this pair in particular. We're seeing the euro pound above 85. We're seeing the pound dollar. It went below 125 for a second there. So for some hours there. So I think it's natural. I think we saw some breakouts last week, especially into the close. It just kind of barreled through into the close, and we didn't get that kind of Friday, profit taking. So I guess we're getting that Monday profit taking, and we'll see what. I think what really comes out of FOMC minutes and what people are expecting, how the dollar will move after that might help to determine some of this other price action, particularly with the yen. in some of the calm dogs.
Okay, so that pretty much covers all the pound crosses. I know that you publish a report called the Quid Report, covering all things cable. So if people are interested in your Quid Report, I also know, Lydia, that you're a registered investment advisor. And I'm curious, after this tremendous rally that we've had since the election and attaining 2,400, what are you advising your clients to do in the market after this big bull run? I know that the money that they have there is much lower on the risk pyramid than trading currency.
Sure.
Are you saying stay the course, or what are your views of the condition of the markets where they stand now?
Equity markets, to me, are still U.S. equity markets are still very strong. And, you know, politics aside, just reading the markets, there's really not an indication to sell at all. So it's definitely staying the course and even looking for opportunities to work new money. So, you know, which is not now, in my opinion. I wouldn't put new money to work now. I'm still waiting for this dip to see if we can really get a true, you know, correction lower. And that's really all I'm waiting for. This was a great opportunity, but, you know, as a fib player, a fib trader, I'd like to see it move lower. Will it? I don't know. Could it? I think it can. You know, I think we have some weakness in the market. I think we have a little uncertainty with some of this, with the Russian investigation and some of these now treason calls. I think some of this can help work the market lower, but I don't think it'll be a bearish event. I really don't. And so what
I think a 108 yen, 107 yen could take it there to what you're looking for, 22.5.
Mm-hmm. And that would be a strengthening in the yen, right? From where we are now.
Yes.
Yeah, exactly. So, and then in that case, we'd see this finally start to break lower to 135. So, yeah, I think that if we see more risk aversion in the market, you know, and we get that yen to rally finally and break out of this trend, trading range, that we'll finally get. So I'm telling clients to be patient. We're not in a hurry to buy. We're certainly not in a hurry to sell. And
how about bonds? Are you in a hurry to sell like everyone else, or
I'm actually not. So you can go to my blog at FaithMyFX.com. I just published something on bonds last night, and I think it's actually interesting. And just using the TLT as a proxy.
You're looking for the gap to be filled at 130?
I am. I'm actually looking for this to kind of bottom out here, and I think it can move lower. And I said that I think it can move lower and still be in a correction. I think this is just my chart is I think it's a correction. That's where we're at. And so to me, it wasn't a bearish event. Quite frankly, with this bearish divergence, you should have been trying to sell your bonds, depending on how you're holding bonds, but you should have been looking to sell in the summer of 2016. And
almost looks like there could be a third drive. You have two drives there.
Right.
And that was a pretty high rating, 78 or so for a major top. I mean, I like divergences to be under 70.
Okay.
But anyway, but the moving average looks doable at 128, and there was a gap around 130. So you like the bond market here. So one of them's wrong. I mean, stock market, maybe that's the catalyst, a pullback in the S&Ps to what you're being patient for, and bonds rally during that time frame.
Rally a bit, right? Yeah, and so I think also the fact that during this run up, at least since the inauguration, we haven't seen bonds fall over either. You know, we haven't seen it break 116, which I kind of expected as the stock market continued to rally, which would have been fine because I think it can, I think it can move into 110 really. this TLT. So the fact that we were moving higher in stocks and we weren't moving lower in bonds, kind of reinforced to me that we're not in a bearish market yet with bonds. I know a lot of the bigger guys are saying that bonds are over. I just don't think so. I just don't think so. Technically, that's just not what we're seeing yet. We sold bonds last summer, and we're dipping our toes back in at these below 120 at these levels, right? So I still like bonds. I still think there's a case for bonds, and I don't think the bears have made a strong enough case yet.
Okay. Well,
and
Lydia,
let me just say that so the Quid report is no longer published. What I do now, I do have a class, a Forex class, for those who want to learn one-on-one, just in a one-on-one setting. I'm offering that now instead of the written report. So I just wanted to. Okay,
so you're doing one-on-one mentoring, no more Quid report, so that answers that. You could always find Lydia at Faith Might is her Twitter handle, and if you want to post a link to your website, Lydia, just feel free to do it on the question or chat box so people could find you. And
okay.
Man, I'm back on the Juice Plus and feeling strong and full of vitamins, Lydia. And what a great reunion. I'm glad you were my first guest in the new chapter, and we had plenty of eyeballs checking you out today, 170, 180, and appreciate the excellent content you provide every time I talk to you, my trading warrior sister.
Thank you so much, Dale. I'm really happy to be back. Thank you for the honor of, opening you up on F.A.C.E.
Yeah.
I'm awesome, and it's awesome for you to be paired up with the ForexAnalytix team. They're amazing. Two of my favorite traders, Nick and Blake, being a part of this.
Yeah.
I know.
Yeah. What a crew, huh?
I mean, you guys are rocking it. So.
What a crew. How do you like the F.A.C.E. acronym?
Oh, I love it. So I was like, over the weekend, you guys are throwing these things back and forth. I'm like, what is F.A.C.E.? I know LAR, but what is F.A.C.E.?
Yeah, F.A.C.E.
The graphics start coming out. You tweeted the graphic. I was like, oh, that's awesome. He's with ForexAnalytix. Okay.
Yeah. If you don't like trading alone and you're looking for a great place, come on in and check out F.A.C.E.
Yeah,
Bring your brain to F.A.C.E. So thank you very much, Lydia. We're gonna be doing this on a more regular basis, and you're my go-to person on the cable.
Thank you so much.
Thanks again for sharing, Lydia.
Absolutely.
Everyone, thank Lydia for her presentation today.
Thank you all.
Show a little appreciation for Lydia showing up here, being our first interview here in F.A.C.E., and she's an excellent technician and offers one-on-one mentorship, and you could tell from her demeanor she's a natural teacher. So thanks again, Lydia. Good hunting the rest of the week. Have a great April, and talk to you soon.
Absolutely. Thanks.
All right. Adios, my friend.
Thank you.
So, guys, I know there were a few hiccups here in our first session. We're going to work on it. We're going to work on, people being able to share their charts in a more effective way. I'm going to work with Steve after the close so we don't have these hiccups. I'm still acclimating myself, but what's your impression of our first day? Our first day in F.A.C.E., new room for you guys, many of you guys, and new room for me and new charts. I think someone asked how you show the fibs on the charts on TradingView. I had to ask Steve how to do that. All right, so this is still Lydia's screen, so I need my screen back. Show my screen. Anyway. This is how you do it. So you go to Pitchfork. Who was it that asked about the Fibs? You go to Pitchfork and you just click it on the side and then just scroll down and there's your Fib retracement. Euro's coming out of the hole. I like it. I like the call. Sometimes it could be a turnaround Tuesday. If we get another low into turnaround Tuesday, we may fade Euro weakness tomorrow. But there you go. If you want to show it, you want to show your website, I could give you the presenter back. 3 drives the RSI. So I gave you a few examples. The Aussie was a pretty good one before its recent break, right? See this? 1, 2, 3. I'll teach you and be patient as time goes on. See this high in the Aussie when it blew off like this? I think this was the Fed meeting. The RSI reading up here was 78. That's a confirmed high. Give me a Y if you see it. You see that both price and momentum made new highs? Okay. Here's your, it pulled back a little and it made a new high, right? But price did not make a new high, did it? Momentum diverged. Give me a Y if you could see it. Okay. Then we had one more pullback. And we had one more push up for 3. Look at this RSI reading. 65. So that was ideal. And then you take the first red candle and you have the trade. You see that? So that's a 3-drive formation using the real simple implicator. I've renamed RSI because you'll get to know what confirmed highs imply. Markets rarely peak on a confirmed high, although there's always exceptions. The recent high in the euro was a confirmed high, but normally they don't. And you can buy pullbacks looking for new highs. And what my favorite divergence setups are, as time goes on, it'll become second nature to you too. So maybe I could end it with a song. How many people have been right the market, but then they get stopped out, and then the market goes the way they thought they were going to go? How many? Give me a Y if that's happened to you. You're right the market, wrong the trade. Whipsawed. Okay, here's one cure. Here's one cure, and I'm going to end the webinar with it. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Use less leverage. So guys, I don't know how many of you are subscribers to the best website on the net with this team. Okay. But, you know, Blake has some excellent trials going here. Here it is. For only $1, you could check it out for 10 days. So I encourage everyone that benefited from today and has joined this room to sign up for a trial. In fact, if you risk $1, It might improve your luck. In fact, I guarantee it'll improve your luck. Again, you know, you'll get this traffic light page with all the streams, all the alerts. Remember that there's a phone app. You're going to get macro. Can't see my screen, huh? I don't know why. It's probably because I gave it to it.
Dale, you have to select which screen you want to show. There's a pop-up that says show which screen.
Yeah, I'm sorry.
It's all right. It's, you know, your first time using this. There you go. Now we can, well, we see the one where it says go to webinar.
Okay. There you go. All right, so I was showing on the home page. Here you go, guys. Here's your trial. $1, try for 10 days. Get all of Blake's stuff, Nicola's stuff, Greg's stuff. He had an example of it today. This traffic light page is amazing, where you're going to get live feeds of the live stream of everything happening here. You don't have to subscribe to 4 different services. You get Elliott Wave from Grega. You get harmonics from Nicola. You get basic technical from both Blake and Steve, candlesticks from Steve and Blake, and the macro from Stelios. So you have it all right there. You have Twitter feeds. So I encourage everyone, if you like this room and you want to continue this room, it is a community. That includes supporting ForexAnalytix. Everyone with me? Thanks for your patience today with me getting used to the room and not knowing what I'm showing sometimes. I'll get the hang of it. And remember, most of all, don't just count your pips, count your blessings. And hope to see everyone return tomorrow. Tell your friends about us. We're like the Major League All-Star team. Some of the best analysts in the world are part of the team, and we'll try and get the community a little bit more involved tomorrow. Adios, everyone. Good hunting the rest of the day. Don't stay trapped in front of your platform all day. It's spring. Go out and smell the roses. Money comes and goes. Time is gone forever. Make it count. Adios.